Hello and welcome to The Print. I'm TCA Sharad Raghavan and I'm going to be speaking to you about how, despite likely saving 165 crore on the sovereign gold bonds that can be redeemed today, that is Monday, August 5th, the government looks like it's going to substantially scale back on issuing these attractive investment products. I'm going to explain why this is. The customs duty reduction for gold that was announced in the budget and the resultant fall in the price of the precious metal will reduce the amount the government will have to pay out on the sovereign gold bonds or SGBs coming up for redemption Monday. However, the budget move has also meant that the government will earn much less from the tax it charges on the import of gold. Additionally, gold sector analysts and market participants that the print has spoken to said that the lower price of gold due to the duty reduction will increase the demand for future SGBs that are issued by the government. That said, an analysis of the budget documents showed that the government is looking to significantly scale back its future SGB issuances. This is likely due to how expensive SGBs are for the government, with its liabilities associated with these growing by as much as 780% over the last 5 years. The government launched the SGB scheme in 2015, under which people could buy these bonds instead of buying physical gold. In return, they earned returns from this investment if the price of gold increased over the 5-year minimum period they had to hold the bonds. The full maturity period for the bonds is 8 years. In addition, people who invested in these bonds also earned interest at the annual rate of 2.5% paid out every 6 months. The price of gold at the time of payout is calculated as the average price of the precious metal on the previous 3 business days, as measured by the Indian Bullion and Jewelers Association. This is where the customs duty reduction in the budget becomes a factor. Finance Minister Nirmala Sitharaman, in her budget speech, announced that the customs duty on gold would be reduced by about 9 percentage points to 6%. Since almost all of India's gold is imported, this had an immediate impact on the price of gold in the country, in turn impacting the amount the government will have to pay out on SGBs that are redeemed. On the day the budget was announced, the price of gold fell 4.1% that day itself. While the price of gold has recovered somewhat since then, it's still lower than pre-budget levels. According to government data, the SGBs that are up for redemption Monday were purchased on 5th August 2016 at 31,190 rupees per 10 grams. After 5 years, 202 kgs of the 2.95 tons that had been initially purchased have been redeemed, leaving about 2.75 tons for redemption after the 8 years, which falls on Monday, 5th August 2024. According to market participants, the government would save about 165 crore on its payouts on the SGBs that are redeemed Monday. That said, investors in these gold bonds would still earn 125% as returns, and that's not even counting the additional interest they would have received. However, other analysis showed that the amount the government would save on SGBs would be relatively small when compared to the revenue it would lose because of the reduction in the customs duty on gold and silver. According to an analysis by the think tank Global Trade Research Initiative, the government would lose about 28,000 crore every year from the reduction in the import duties on gold and silver. While GTRI did not estimate how much of this 28,000 crore revenue foregone would be on account of the lower duty on just gold, market participants have said that this could be about 15 to 18,000 crore every year. So, on the one hand, that's a saving of 165 crore, and on the other hand, a revenue loss of 15 to 18,000 crore every year. Now, people buy gold as an investment for one of two reasons. One is to diversify their investment portfolios and hedge against things like inflation and economic uncertainty. And the other is because they expect the price of gold will go up. So, if the government does issue fresh sovereign gold bonds, then there will likely be strong demand for them because the price has currently fallen. But the question is, will the government issue fresh ones this year? They might be very attractive for investors, but exactly what makes them attractive is what comes as a big cost for the government. The print's analysis of the union budget documents showed that the government's estimates on the amount that it will receive from the purchase of SGBs in 2024-25, which is this year, were lower than what it had initially budgeted for the year in the interim budget that was announced in February. That is, while the interim budget had estimated this year's receipts from SGBs to be a little more than 29,000 crore, this was slashed by 37% to just 18,500 crore in the full budget. Since analysts expect the demand for gold to remain robust and demand for SGBs to also remain robust, especially as they serve as a safe haven investment during times of heightened economic uncertainty, this reduced revenue from SGBs would appear to be the outcome of the government issuing fewer gold bonds, not that people would buy less of them. The SGB framework was intended to provide a secure and simple alternative to physical gold, but they have turned into one of the most expensive tools for government borrowing. The budget documents again show that the government's total liabilities on account of the SGBs are expected to balloon from about 9,600 crore in 2019-20 to nearly 85,000 crore in 2024-25. That's more than a 780% increase. The exponential rise in gold prices, the government paying an additional 2.5 interest rate on SGBs, and the fact that these bonds are exempt from capital gains tax and TDS has meant that the center may choose not to rely too much on this avenue for its borrowings. All of the gold sector analysts that the print spoke to confirmed this analysis. This reluctance seems to be showing itself in the government's actions as well, or rather their inaction. With 1/3 of the financial year completed so far, the government has yet to make any announcements on the issuance of fresh sovereign gold bonds this year. So basically, on the one hand, you have some small savings on SGBs, but a large loss due to the customs duty reduction. And on the other hand, you have mounting liabilities due to how attractive they made the sovereign gold bond scheme. So overall, it's very, very expensive for the government to carry on. But on that note, that's all from me. Thank you for watching.